Hello everyone, this is Percy the Market Guru, aka Percy FX Guru. Welcome. And without further ado, don't forget to subscribe, like, and click that notification bell for whenever I upload a new video, you get notified. So let's get straight into it. So today's video is about mastering Forex trading, pro strategies for beginners and experts. So what are you expecting to learn in this video or this lesson? One foremost, this will help improve your consistency in the market. It will help improve your analysis. It will also help improve your directional bias in a way. It's going to help improve you as a trader as a whole. Either you're a pro or you're a beginner. Because what I'm about to teach you, some of you probably have never seen this before. Probably going to be seeing it for the first time. So please have an open mind when watching this video. Have an open mind. Don't be rigid in your own way of doing things. This is just a way to open up your mind to help improve your trading as a whole. So without further, let's get straight into it, guys. Let's get straight into it. So I'm looking at a weekly Nasdaq. I'm looking at Nasdaq on a weekly. So it's a weekly time frame, and I'm focusing on this candle right here. This candle right here. So that's the candle I'm looking at. So we are approaching this with a narrative of this week hasn't happened yet, right? So we are gonna be looking at the price in this week here. So we are approaching it with the narrative of this week hasn't happened yet. So assuming we are assuming that it's either gonna go up or it's gonna go down when the week opens and the week goes, right? So the first thing I do, right? The first thing I do when I approach the market on a new week is that I look at the nearest high or the nearest low that the market might go to. So this is the nearest high, and this is another high that are near, and then this is the nearest low over here, which is at the bottom. All right. This is our nearest low here. This is the low there. This is at the bottom. So I always want to know where the market is most likely to get drawn to. Because you know that the market has to go to a low or a high because it's chasing liquidity. It has to get traders involved into the market. How else do we trade if if we are not getting involved in certain areas of the market? I don't know if that makes sense, but I think it does. Um, because we are trading the market. So at some point we have to get involved. So the market chases or it goes after these positions or locations where traders are gonna be involved into the market. So I'm gonna also put a vertical line here on this candle, this weekly candle that I was talking about. And then after doing that, I'm gonna go inside the weekly. I'm gonna go on the hourly time frame, 1 hour time frame, and then I'm gonna see where is it that the day has started. So I'm gonna move this line here. I'm gonna move it to 12 o'clock 000. And by the way, guys, this is New York time. This is 12 o'clock New York time. So my chart is set to the New York time zone. And how you do that is you just click on this here. No, sorry, it's not this. Just click on this. It's simple details. No, sorry. I think you click on this. Let me see that. Settings. Oh yes, and then you go symbols, and then you go down, scroll down. And then here on the time zone here, you just click on this, and then you just choose New York New York, and then your chart's gonna be aligned with the New York time zone. So I'm putting my line here on the 12 o'clock. The reason why I'm doing that, so this is where now you start to see how what I'm about to teach you develops. And so I'm putting this here, right? This line here. This is the New York opening. So which means This is where trading starts. This is where the trading day starts. Because everything is based on the dollar, guys. All the currencies, you could say, we are basically trading against the dollar. So it is it makes sense to use the New York time zone rather than other time zones, because that's where you'll find the highest volatility in the market during the New York times, you know. Um, so it will make sense. It will make sense as we keep going to the video. So as I put my vertical line on the New York time opening, so this means that this is Monday's trading. Monday's gonna start here. This is Monday's trading. Monday's gonna start here. Then it's gonna move all the way up until going forward throughout the week. So before I get myself into the market, I first wanna identify the high that the market is most likely to get drawn to on a weekly. I mark those, which I did here with this sky blue line, or that line, that blue line. And then secondly, I mark my New York opening. Where is my New York opening gonna be? Which is here around 12 midnight. And then after I'm done with that, I want to go 5 hours back. I'm gonna go 5 hours back from this New York opening. So I'm gonna count 5 candles going back. So in this case, it's gonna be this is 1, 2, 3, 4, 5. That's 8 o'clock. I also like to go back to 6, because around 6, 5, around these 2 candles here, the Asian session starts around these two opening here. The market, let me just put it like this: the Asian business opening, it's around these 2 candles here, 5, 6 candles going back, 5 to 6 candles going back around 7:30. It's around 7:30. So you can use 5 candles or you can use 6 candles. I like to use 6 candles for in case, because it's around 7:30 in New York time. It's around 7:30 New York time. So I'm gonna use the 19 New York time here. So here I put another vertical line. Why am I doing that? Just because I'm marking my Asian range. Basically, I'm gonna make this yellow so that you can see it's a different line. So basically I'm marking my Asian range. So I'm gonna make it yellow. And then from this, let me go to a smaller time frame. Let me go to 15 minutes so that you can see clearly what I'm talking about. Oh boy. Okay. And then from this point on, where I have this yellow mustard, or this yellow line here, to this green line here, I'm gonna mark a range. I'm gonna make a range from the top, from the high of this candle. If this candle wasn't the high, I was gonna use the high of this range. So I'm gonna use the high of this candle and the low of it. And the low, where's the low? The low is here. Here's the low here, on this candle here, on this candle here. That's the low. So I'm using the high of this range here, of this whole range here, this box here. And what I do is I move it, I transpose it, or I reflect it, or I don't know how to say it, but I move it to the right. I'll explain why I do that. So from the high of the range to the low of the range. So this is my range. This is my Asian opening range here. So I'm gonna drag it out over the New York midnight, all the way throughout the New York, all the way throughout the day, basically. Let me just put another vertical line to show where the day ends, where the New York day ends. So the New York session ends right about here, is it? Yeah, it does end there. So a new day begins here. So this is a Monday, guys. This whole area here, this is a Monday. This is a Monday. So I'm gonna pull this all the way up to here. Excuse me. Okay, guys. So from the opening here, right? I'm also gonna put another line after I've shown my Asian starting or opening. Not really an opening, but it's like the Asian opening. This one they start opening business. So and then I shade out all that area all the way throughout the next New York session open. So I'm gonna make this green because this is the New York session opening. And then what I'm gonna do next, guys, I'm gonna make another line from the opening of the New York session. There's an opening, which means that's where the market or that's where the price is gonna start opening it. So I'm gonna make another line all the way across the New York session, the New York time zone, all the 24 hours from midnight to midnight. So I'm gonna make another line. This is my price opening. Okay, this is my opening. So from this point on, right? Hence, let's say the market opens here, right? So the market opens here, right? So from this point on, I'm looking at which side is the market gonna break out. Is it gonna break out below the Asian range or below or above the Asian range? So from this point on, from midnight, what I look at which side is the market gonna break out. Is it gonna break above the Asian range or is it gonna break below the Asian range? So the first side in which it breaks out of, like in this, right? Sorry. So the first side in which the market breaks out of inside the Asian range, if it breaks above the Asian range like it did here, right? For me, I take it as a buy, but I'm not gonna buy it here. I'm not gonna buy it here. Reason why is because what the market does, right? It chases liquidity. Like it's always chasing liquidity. It always has to get people involved into the market. So I'm not gonna get involved with the buy here. Instead, what I'm gonna do is I'm gonna wait for it to sell. I'm gonna wait for it to go in the opposite direction in which way it broke out of the Asian range. Above the Asian range, I'm expecting it to come back down to the downside of the Asian range. And then in this area here, that's where I'm going to be hunting for a buy. That's where I'm going to be hunting for a buy. Reason is because we've already broken above the Asian range. Now we are swapping liquidity with the one below the Asian range. So the moment we break above, I'm targeting this area here. I'm looking from from the opening of the New York session all the way down here. This is where I'm gonna be looking for my buys. I can either buy here on the opening, or I can or I can buy here below the zone, or I can let it go down and go on a 1 minute time frame and look for a proper buy setup in this area here. So I'm gonna zoom into that area just to show you. Let me just explain this first before I continue, before I get into the entries. Now I'm just trying to show you guys the bias, the direction of where of how you can get direction easily going into the trading, or how to improve your trading using this range. So the moment it breaks above, right? The moment it breaks above, for me, it's a signal to say, oh, we're looking to go higher, but it will not go up immediately. It's first gonna go down the opposite direction before it can go in that direction that you are that I'm talking about. Okay, so now look for it buy here. The market trades up, and then back into the what? Back into the New York consolidation. Back into the I'm back into the Asian range consolidation. Let me do this. Another so I'm gonna put it in 7 o'clock again. So the Asian range, you just move it across from 7 to 7, and then midnight to midnight, obviously. So now we have another day. So this is a Monday, right? This is a Monday. This is Monday's trading. Let me do this so that you can see. Where is that? 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 Range date. Yes. So this is Monday's trading. So let me do this. Oh, sorry. Delete. Delete. Oh man, let me do this. So this is Monday. So that's Monday's trading, right? And then this short range here, let me clone this so that I can, then from this range here, let's make it yellow as well. Say Asian range. So this, let's make it yellow. So everybody can see that, right? So from his point on here, this is Monday, this midnight, New York time, all the way across. That's Monday's trading. And then from this point here to this point here, that's the Asian range. So which means from this point here, clone this. From this point here, that's the new Asian range starting, right? So I'm gonna mark the Asian range again from the low of the range to the high of the range, then drag it all the way across. Drag it all the way across to 9. And then I'm gonna copy this again, clone it, and I'm gonna move it all the way to midnight. Then I'm also gonna do the same thing I did with this. I'm gonna clone it, clone. Then I'm gonna put it on the opening of I'm gonna put it on the opening of make it arrows. So I'm just gonna move it just here. Then I'm just gonna so remember what I said before, like on the Monday's trading. From the moment the market opens, right? From the moment it opens on this candle here, this is the Asian range, right? This is midnight. This is Tuesday now. This is Monday. Then from here to here is Tuesday. So the moment it opens, I look and see where the market is trying to get to. Is it trying to get above the Asian range or below the Asian range? So let me just do this. So from this point on, the market went above the Asian range. So the moment it goes above the Asian range, for me, it's a buy. I take it as a buy signal. But I know that the market is not gonna buy immediately. I know it's gonna probably come back into the range or go below it. And this is the area where I'm either gonna put my buy. I'm either gonna put my buy on the opening, on the New York opening. This is what I'm gonna buy, or I'm gonna wait for the market to go deeper below this area here. That's where I'm taking my buys. Either below this area here, or I'm taking my buy here. From the opening going down, this is where I'm searching or I'm hunting for my buys. This is the area which I'm searching or I'm hunting for my buy. This was the CPI news here. I missed this trade last week because I thought it was gonna get deeper than this. I thought that it was gonna go deeper, then I'm gonna take buys, and then it was gonna, but it just went like, it was a quick move. I couldn't even get into the move, but luckily I got into that move the previous day. I got the move here, so I got the buys here, so I didn't really need to get myself involved into the CPI movement because I was already into trades and I was holding those trades. So from this point on, right, the market breaks up into the upside, and then before continuing to the upside, it first drops below the New York opening, these lows here, taking out the buyers from here who have their stop losses here, then shooting up into the sky all the way. This is a beautiful move, guys. This was a beautiful move. So then I do the same thing again, right? I'm trying to show you guys how easy it is to spot trades if you have a little bit of understanding of certain things. It's not always about, sometimes you just need to understand. And don't forget that we're also going forward, we're reaching for this highs. Remember the beginning of the video, I marked this high here on a weekly, right? So we are involving ourselves into the market with the narrative of going to the upside, like chasing liquidity to the upside. That's our narrative. That's our narrative. Our narrative is that the market is bullish. We are going for the nearest highs or the nearest low. So the nearest is the high. So we are going for that. So Tuesday, CPI news pushed. Let me zoom in. Tuesday, CPI news pushed close towards this line here, which is the weekly target, the weekly liquidity which we are planning on reaching for. So Tuesday's push towards it, didn't get there yet. Now we're going to the next trading day, which is Wednesday. Now this is where things get interesting, guys. This is where things get interesting. So same thing, we have our New York midnight, right? New York midnight, and then we have our Asian range here. So we're gonna do the same thing again. We're gonna set up from the low of the range, to the high of the range. The high of the range. Let me move this. Let's move this from the low of the range to the high of the range. From the low of the range to the high of the range. Then let me do this again. Let me clone this. Remove it here. So same thing again, guys. Doesn't change. Repeat the same process over and over again. It's gonna take you a while to get it, but once you start to see it, once you start to get it, you'll start seeing trades a whole lot easier. So also, I'm gonna also do this as well. I'm gonna put in the trend line just to mark. Oh my god. Okay, I put in a trend line just to mark the opening of the the New York opening time. So now we've marked the New York opening time, right? So same thing applies. What do? I look for where the market is trying to break out of. So the moment it breaks out of the upside of the Asian range, for me, it's a buy. It's a signal for a buy, basically. So where I buy is below the entry, at the opening, or down here, or down here, or down here. at the opening or down here. So from this point on, I'm in the trade, I'm going up with it. But obviously, guys, you gotta use your TPs and your SLs, because sometimes the market moves in that direction and then reverses. So if you don't have your stop losses, or you're not protecting your trade, you're gonna find yourself in profits and then back to losses again. So this, I'm not showing you reversals right now. Right now, I'm just teaching you how to salvage this type of market condition, how to salvage the Asian range, how to use it to your advantage. I'm not looking for reversals right now. I'm not looking for reversals right now. I'm gonna get into reversals after I'm done showing this, because I'm trying to teach this Asian range concept so that you can understand what is it that I'm trying to get to, what is it that I'm trying to show you guys. But this is a reversal day here. This day here, it's a reversal day here. It's a reversal day here. Because the market went above the range, yes, came below the opening, and then it bought, right? That's a good amount of points that you could have collected. Good amount of points. You could have probably had about 1,000 points, 1,000 something points, which is a good amount. Then the event here, check after hitting this target here, after hitting that weekly target here, we came back and had a reversal day. From being above, now we're below the range now. Now we're below the range now, and we're consolidating below the range. And then the next opening is from here to here. So this is Wednesday, guys. This is Wednesday. From here, from reaching that target, now we are going down now. Now the market is trending down from reaching that target on a weekly time frame that we set this blue line on here. This blue line here. So now on to the next day as well. I just want to finish up these days up until Friday so that I can explain something to you guys, because there are still things that I need to like explain in this video that are very important. So now here's our new session. Our new session starts here. Oh wait. Let me drag this. So our new session starts here, our New York session. So now what do? We mark our range, our Asian range again. That's what we do, guys. All the time. We mark our range and then we work within the range. The most amazing thing about the range is that you buy and you sell outside. The only time you buy inside the range, it's when you already know the direction, after we've broken out to the one side. For example, if we are going up, right? For example, if we are going up, right? So if we are going up, after we've broken out to the upside, you know that, okay, it's signaling up movement. So what do? The only time you want to buy inside the range is when the opening here is like, it's in the opening. But in most cases, I prefer buying below the range. You can go into the smaller lot size here and then wait for it to get down here, and then you can go with like a proper lot size. Then you can, but in this case, it didn't get to that point. For me, if it does this, if it doesn't get to this, I'm expecting a manipulation day, which is where we are going to right now. I'm going to explain it right now. But in this case here, this is the high of the New York session, right? But this is the Asian range. This is the high of the New York session. This is the Asian range. So the moment the market breaks above the range, and then the range is coupled with the New York session high. It's not within, it's coupled within the New York session, right? The range is within the New York session. the whole New York session, from here all the way to the 12 to 12. So the New York range, the Asian range is within. So if the range is coupled within the high of the, or is near the high of the New York session, you can expect the market to spike or to take out the Asian range, take out the New York high, then reverse to the downside, taking out the Asian range low, and then yeah, continuing to the buy. Or but in this case it was a buy, take out the high here on the weekly, and then it ranges, and then it goes on to the next day, which is where we at right now. So this is the most interesting day here. So let me do this, clone. Yes, thank you. So from the opening here, so this is the opening. Let me drag this thing out all the way to the 12 midnight. And then let me clone this. Oh, sorry. Let me clone this. Clone it. Clone. No, not these. Oh my goodness. Sorry about that, guys. I don't want to make this video too long. I just want to make it. Okay, let me just undo. Clone. Move this here. 7 to 7. So this is Wednesday's trading. No, this is Thursday's trading. What? So I'm gonna put this on the range here. So this is Thursday's trading, not Wednesday, I'm sorry. So I wanna like point out something out to you guys. So same thing is happening here, right? So you have the range, yes. And then from the opening, I'm looking at which side of the market is gonna break out of. So consolidation, it breaks out here. And breaking out here, it's breaking to the downside of the Asian range. You see that? Downside of the Asian range. And the Asian range is coupled with the high of this day here. With the low. Is the low of this day here. This is the low of the day of this New York session day, but same time is the range, is the low range of the Asian range. So it breaks out here. Immediately after it breaks out, it goes back inside. So this is where I say from this point you can enter the trade as a seller, right? But look at what it does here. It drags you inside, comes back, drags you again inside, then it goes out. Which is why I like taking the trade outside the range. If it breaks out this side on the downside, I know it's going down. So what I'm gonna do, I'm gonna wait for it to get to the other side of the range, which is here, around this week's here. This is where I'm expecting to get a sell from this point. This is where I want to sell it. This is where I'm going to sell it. I'm going to look for a setup in this particular zone here, and then I'm going to look to sell it. There's a sell, significant, even though it didn't go all the way. But from this point on up until somewhere here, it's around 1,000 points, depending on where you get it. Around 800,000 points, 80 pips, 800 points, 90 pips, 900 points, somewhere around there. So this is a move, guys. You could have eaten or salvaged this move. You could have been involved in that move. So this is Thursday's trading. And then what the market does is it just consolidates. It's a consolidation day. Doesn't do anything much. Then same thing goes for the next day as well. Let me show you guys. It doesn't always go all the way like the CPI news did, where it just shot up and then you get a huge, crazy move. Sometimes you get moves like this. But this is a move, guys. Because if you enter here, if you enter a sell here, you're expecting to get out around this low here. So from here to this low here, you're nice, you're fine. You're nice, you're fine. And then Now on our next day, so I'm gonna mark our next range, our next agent range for Friday, which is this one here, all the way up until 7. So this is our next agent range here. This is our next agent range. So this is our next agent range here, right? So I'm gonna clone this as well, just to show you guys quickly how to. Oh, why is it cloning the wrong things? This thing, my goodness. Let me click on this line, click clone, move it all the way to. So I'm just gonna leave it here since this is where the market closed on Friday. Then I'm also gonna clone this. This, guys, is very informative. This will change your trading. So this is our opening. This is our New York day. This is our New York trading Friday. This is our New York opening. This is our day Friday. So from this point on, what happened is the market moved to the downside, right? So if it moves to the downside, I take it as a sell. So if you see this high here, this agent range high here, it's coupled with this New York session high. It's the same. It's within the same day. So if the agent range high and the New York session high is coupled, it's like close to each other like this, I expect the market to break both of them. Don't forget, after breaking them, don't forget that we already broke below the agent range. So first it broke below, so it's a sell signal. So what do? We're going to go to the upsides. What do? Taking out these ones here. Taking out these ones. After taking out these ones here, we do what? We sell. We sell. We sell. To the what? To the downside. So from the sell again, there was another buy. How did this buy come about? This buy came about because of breaking the high of the New York session, the daily high of the New York session. Because I don't know how to put it. If the session is within the range of the previous day's high and low, right? If the agent range is within the range, maybe it's somewhere around here. And let's say, for example, it does break below here, then it goes back to the upside. If it does break below here and goes back to the upside, and this high is not close like this, maybe it's a bit further up, there's a high chance that the market will sell to a point where it takes out the previous day's low. Like, let me show you, like here. But since the high of this day here is closer to the Asian range, so it took out both of them. And the moment it takes out the daily high, it's a signal of continuation to the upside. So without forgetting the continuation to the downside here from this breakout here on the Asian session, without forgetting that. So we have broken above, then we're gonna break below, and then now we're gonna break above. Something like this. Let me just show you an example. Something like this. I hope this makes sense, guys. This makes sense. Something like, where is that? Something like this. We're broken below, above, breaking the day's high, which signals prices going to the upside. Then we get a sell for this breakout here, and then we get a buy for this breakout here, and then the market consolidates back into the. I hope you guys can see what I'm explaining here. I'm gonna go back on Thursday and do the same thing and show you what happened here. I'm gonna go back and show you and explain exactly what happened here. Same thing happened here on this day, like what happened on Friday. The market opens here, right? Consolidates a bit, yeah. Doesn't break, it breaks to the downside here, confirming, breaks to the downside here, confirming that we are going down because we're broken to the downside. But we won't just go down. Instead, we'll go up. This is where you're going to find your sell. Then we break to the downside. The moment it broke out here, it broke the low here. So which means it's supporting the breakout here and this one here. So instead of going all the way up, which we did anyway, but it was just a consolidation day basically, because this is the high. Then from here on, came back here, then you just consolidate back inside. If you guys can see this is like the same thing happening over and over again. Whenever the market doesn't trend to whichever side, it just consolidates. But if you look, it's playing around. Why? It's playing around the opening price. The opening price, which is this line here. So you can salvage moves from there. Same thing happened here on this day. I'm gonna show you. It wasn't really trending, but it's similar to what's happening. So this is the opening, breaks to the upside, confirming a continuation, comes back here. This time it didn't dip all the way down here, just came below the opening, went all the way up, came back, bounced here on this daily opening line here, went all the way down, then bounced again that line, then so I hope you guys can see what I'm showing you guys here. So same thing happened on this day as well. Same thing happened on this day as well, on a Tuesday. The opening, put a line on the opening. What is that line? Keep skipping this line. Opening, tried to go down, didn't really do much, went up, breaking above the high, daily Monday high here, also breaking above the agent range high. So you can see that the above the agent range high, above the Monday high, has the highest probability of it going to the upside. Then from here on, it just shot all the way up, up until then you just consolidated from there on. So if the agent range and the high of the day, they're in support of each other, like they're going the same direction, it's basically a higher probability sell or buy, depending on which direction it breaks out of. Okay, and then another one here on a Monday. So a Monday, it started here, right? Broke above. I'm gonna take the highest high, not all the highs. I'm gonna take the one before the market reverses. A low, high, and then consolidation. Then consolidation. If you go back into your chart and go back in time, you'll see that everything is happening over and over again, and it's all happening over and over again over the New York opening. And the agent range is like it sets a platform, or it sets a base for you to work on. You know where the market is most likely to get to or come based on that. So I hope you guys find this helpful. I'm gonna do another video on this again so that it drills in, because right now it might be new, it might look new to you, so you might not really grasp what is it that I'm trying to explain. But thanks you guys for watching, and see you guys next time. Bye.